Good morning, traders. Welcome to this video on the euro dollar and pound dollar. This will be the only video of this week, and we will not have a second video as an exception this week. But I'm going to take a look at the markets a little bit earlier, and of course we start with the euro dollar. All right, it's Saturday, so the market is closed, and we see the final result of last week. And from a weekly perspective, in the doji with slightly bullish, but I consider that doji, with wicks on both sides, although the wick on the top is slightly bigger, and I do think that we see two bigger wicks now emerging in the last 2 weeks. So there seems to be some selling pressure at least, as price is retesting logically the previous top. So I do think that those are smaller signals that price is looking for a bounce as expected. We're looking for an ABC down, an ABC up here, and then either an ABC down for a triangle or a 5-wave pattern for an ABC flat. So yes, this entire zone is a resistance and an expected reversal zone for a bearish swing lower. Will price maybe still move up a little bit? It's possible, but I don't think so at this moment. I do think that the 88.6 fib has been hit, and I'm leaning towards a bearish price swing from now on. Looking at the monthly chart, of course, we have 1 day left, Monday the 31st. This monthly candle is not looking bearish as yet, but it's not closed yet. From a time perspective, this is the 4th candle, so nothing much to say about that as yet. On the daily chart, I think we see the zigzag pattern pretty well, as you can see, and price has broken below the rising wedge, which is a reversal chart pattern here. So there was some buying pressure on Friday, though, as you can see. Buyers stepping in after a pretty steep decline. But ultimately, I think it's a first step to a larger push lower. Now, the confirmation, of course, would be break below the 20 EMA zone. And in that case, we should see a price retest the long-term moving averages and the previous bottom. So that still remains, that still remains to be confirmed. On a 4-hour chart, we got the break below the 20 EMA, and the second break here, 1, 2, that did create that push lower towards the 143 EMA, as we explained in our SWAT course, which is simple wave analysis and trading, but it's more than just waves. It's about price swings, price patterns, and explaining how to read charts and how to trade charts based on that. And you can see that, as we explained in our course, with divergence between the tops, very clearly visible on the oscillator with the rising wedge pattern, with the 5 waves completed here, and the 5 waves within 5 waves, and the bigger wave C zigzag here, this being A, B, C. It was likely that with the break below the 20 EMA, the price would get at least down to the 144 EMA. There was a strong bounce, and now we're back in the 20 EMA zone, but I think it's a retest of the resistance. I think if we look at the 1-hour chart, to me, it looks like a 1, 2, 3, 4, 5, as I indicated in my wave analysis on Thursday, I think. This is a wave 3, 1, 2, strong momentum, pulling away from the 20 EMA. The correction here, the triangle pattern, look, A, B, C, D, E, fits very well within the wave 4, respecting the 20 EMA zone, respecting the long-term moving averages, and then price breaking below the fractals and the 20 EMA zone for one more break, one more wave 5. And if you put the fib on the wave 3, here you can see price respecting the 38.2 fib and reaching the almost the minus 61.8 target. I guess if we put it here, it does. So it depends on which swing we use, but getting very close to those targets. Some of those targets. It could have gone even further, in my view, even to 121, but it didn't go there. All right. In any case, 5 wave completed, and as I was mentioning on Wednesday, the break below the 20 EMA in the live video is important. That happened on this candle. When that happens, a 1, 2, 3 pattern is likely, and then we got that break below the 20 EMA zone just 1 or 2 candles later after the video was finished with this candle. And if you're not sure about this one, then this one, which was also breaking below the fractals, and we had a strong push, correction, and push. Now this push up is quite good momentum. So I'm leaning towards these 5 finishing a wave 1, as I also mentioned in my wave analysis on Thursday. And this being a wave A, because there's quite a good momentum. So this pullback I expect is a wave B. I expect a wave C up, and I expect that ABC zigzag to complete the red wave 2. That remains valid as long as price stays below this top, because if price breaks above the top, then it invalidates the wave 1-2 pattern. The wave 2 cannot fully retrace the wave 1. That is a rule within the Elliott wave theory, and that would invalidate it. So that's not possible. Break above the 100 fib level there, invalidation. The wave 2 can go deep. So the 61.8, 78, or 88.6 fib, all three are equally likely. The wave B is a zigzag. So we would expect a 38, 50, or 61.8 fib bounce. So somewhere in here, this one, or this one, I would expect to bounce up, but not shallower or not deeper. The invalidation level, though, is the 100 fib. A break below that means that the three-wave up will not happen as I expect, and something else might be taking place, and a downtrend might occur sooner than I expect. I'm bearish, but in that case, it's more bearish than even I think. Let me say it this way. The 38.2 fib and the 50 fib seem to offer more confidence because of these previous bottoms and a potential inverted head and shoulders level. But even the 61.8 fib offers support here on the left with these bottoms. Okay? So that's what I'm expecting at the moment. For the euro dollar. And I think that this wave 1, 2 will be followed by wave 3 or C. And if it's a 3, then there will be a 4 and 5. If it's a C, then in that case, there could be a bigger triangle like this. A, B, C, D, E. Let's put the fib now back on the wave 1 or A. And if it's a wave 3, it should go to the minus 161.8 target. Even a wave C could go there in this case because of the triangle pattern. And of course, these targets could provide temporary support as well. Okay. Once again, if it breaks above this top, then the immediate bearishness is not valid, but it doesn't mean that it's very bullish right away because we have this top to deal with. So even if it breaks above this top, I still think it's going to slam into resistance at 123, 123.50, and I still favor a bearish bounce at that zone. So bearish candlestick patterns on the daily chart would help confirm that bounce, and that's what I would wait for. All right, pound USD did make the breakout, but didn't go as far as I thought it would. Only went 20 pips, I guess, or I don't know, 30 pips. Didn't reach the 144 EMA, and after that made quite a quick and steep bounce up. So that was unexpected because I thought this was a 1, 2, 3 pattern or ABC pattern that would go at least to the 144 EMA with the divergence pattern in play. So this didn't happen. Rising wedge, divergence. Break below the 20 EMA was only a mild break, really very, very shallow. So the bulls were quite strong here. That took me by surprise. Because this looked like a 5-wave pattern, this looked like an ABC, momentum ABC. So I expected more downside here, right? That didn't happen. This was quite mild before we got this upside. Once it made the upside, though, yeah, it made a strong bounce. It's making a range again, and something that the pound dollar has been doing quite regularly. So last video, I think we were talking about the fact that price can make an ABC here that shouldn't break this top and should find resistance here. I was looking for a breakout or a bounce at resistance. Both happened. We had a bounce here at resistance and a break. The break itself went for about 40 pips. The bounce went a lot more and did about 80. So the breakout, in my view, failed, but the bounce was pretty good. All right, 40 pips I don't think is enough to secure profits, but 80 is, in my view at least. So what next? So I don't know, this pattern to me probably looks more like a wave 1 here still, right? 5 wave. But I think that this is all correction. This is I believe it looks more like an A here. This looks like an ABC for B. And this looks like an impulsive 5 wave up for C. So it looks like a ABC was completed for wave 2. This looks like a wave 1, 2 of a wave 3. But I realize that it's pretty risky. So I think that this elite wave analysis, just because of the difficult kind of price swings that the pound dollar is making at the moment. So a breakout, I think, probably makes most sense. Obviously, I'm expecting a bearish break below the moving averages. That would confirm what I expect is a wave 1, 2, 3 of a 1, 2, 3. So a break below the 21 you made, the 144 you made, this fractal, the support trend line, all step by step confirm the breakout. Whereas a bullish breakout, of course, invalidates my analysis, and in that case could indicate that this is a bull flag pattern, and a 4-hour candle that's breaking above this and the Wiz 8 could show that the price is back in uptrend. But I would still be cautious for false breakouts, even though it breaks to the upside. It might break out successfully, but I'm a little bit skeptical, and I would still be very cautious. So it's a tough spot. I'd rather wait. I have a bearish view, but I'd rather wait for confirmation. And if it breaks to the upside, I'm skeptical and could be a false break. That's basically my view for this week. Things will change a lot throughout the week, of course. We'll have a new update. A week from now, we'll have 2 updates again as usual. And wish everyone great trading. Join our live webinars, become a SWAT member, or try the SWAT ebook for just €24.95. And see you all very soon. Cheers. Bye-bye.